Greetings, members, one and all of the Salivation Nation. With the gold to silver ratio at record highs, is it time to trade this for all of this? Let's explore. Yes, I've been asked several times recently, especially with the gold to silver ratio literally at record highs right now, should I trade gold for silver? It does seem to be the opportune time because we've never been here before. This is a time when the gold to silver ratio has reached 105 ounces of silver to buy 1 ounce of gold. You know, it's something that I didn't think we'd see this quickly. There's been some people that have predicted, well, it's probably going to go up from here. It may get as high as 120 to 1. Before I answer that question, though, let's kind of explore and theorize how we got here. If you look at the historic gold to silver ratio, it's really been all over the place for quite a long time. Indeed. There was a time when gold's price was fixed, and so during that time it's really been difficult to really get a good sense of what the gold to silver ratio should be or was. But essentially, because of the price of silver fluctuating, as it has for quite a long time, the gold to silver ratio has been really all over the place. In fact, looking back throughout history, there's only been several times when it has come anywhere near the natural production or mining ratios. You know, the mining ratio of gold to silver is about 9 to 10 ounces of silver for every 1 ounce of gold. Many people look at those numbers and think that the price ratio of gold to silver is so far out of whack and that they have some hope that it will get there one day. But in reality, it's only gotten anywhere near there back in 1967, or I think this last time that it got, or the first time that it got anywhere near to that level. In fact, I'm going to take a look here and see. It was in December of 1967, it got to 15.67 to 1. And that was... And then the next time that it got anywhere near that level was in 1980. And in 1980, it got down, actually December of 1979, it got to 15.13 to 1. And those are the only times that it got anywhere near the natural mining ratio. Because even in 2011, when the price of silver spiked to almost $50 an ounce, it didn't get anywhere near that close. It only got down to the 30s to 1. In fact, it's right 31.6 in April of 2011, which is more than double the previous times that when they got into the 15s to 1. What about the rest of the time? You know, because as I mentioned about the price of silver, how we shouldn't just look at certain dates and certain specific times. You have to look at the whole grand scheme of things. And it's very difficult to really pick an average with the gold to silver ratio. But typically, as the price of silver goes up, typically the ratio narrows, especially if it spikes wildly after a recession. So what happens here, we're seeing the gold to silver ratio now creeping up, and now it's at 105 to 1, or very close to it. It was actually there a few days ago. It's eased back a bit, but we're going to use this visual as an example because that was the record high. And but it has been trending upwards for quite some time. Does that mean that it could narrow? Or does that mean it's going to continue to go up, or we have a new average? Or could it squeeze back down again? Who knows? We are in somewhat uncharted territories. But I think that because of the ratio widening for as long as it has been, trending upwards, we really haven't seen that kind of upward momentum since the 80s with the gold to silver ratio. There's been times where it's pulled back some, but essentially that average for much of that time since the 80s, since that big, since the Hunt brothers, it has essentially averaged around 55 or 60 to 1. And if you bet on that being the normal again, well, it may be a good time to consider trading your gold for silver and making a hedge, making a bet that it will sometime return to that 60 to 1. But it's risky because no one really knows the future. And in my feeling, as I've talked about plenty of times on this channel, is that I think we are about to witness probably a new gold to silver ratio average. You know, if you take into account what had happened since 1980 and how the silver market has kind of portrayed itself during that time, it is around 55 to 60 to 1. But I believe that nowadays, more so than ever, not only do we see silver's uses increase as an industrialized metal, it is, is recognized as a commodity, and I think it was in the 80s as well. There's a lot of silver was used for photographic development, in the photography industry that is now flipped to PV, photovoltaic, and many other uses. Silver really is a wonder metal in its uses as a commodity and in the industrial sectors, in the biomedical field, and the technology field. It really is amazing, and I think that its uses have become even more diversified in the last 10 years. And I think we're seeing that increase in ratio pretty much on an upward trajectory since 2011, that we may be witnessing that bar of where the average gold to silver ratio could be move up to around 65 to 70, maybe even 75 to 1 might be that new normal. So it's hard to say where things will head. So if you do trade your gold for silver, take that into account. And people will say, well, hey, if it's 105 to 1 and it goes back down to 75, I could still come out ahead. In theory, yes, you could. But you have to take into account the premiums that you might lose when you make that trade. It depends on how much you paid for the gold, and it depends on how much you will pay for the silver. Trading the gold to silver in the physical is not nearly as easy as it is in the ETF world and the futures and world, because you don't have some of those premiums tied to it. You may have trading fees and the like. And there is actually a book that was written about trading the ratio and how you can do that by Karl Ushanka. And that is a book that tells you how to do that. If you're going to do something like that, it's probably better to do it in the electronic markets than in the physical. Because when you take your gold to trade it for silver, especially now, especially when the ratio is so high and the prices are so low, there's a lot of demand for silver. Number one, your LCS or even an online bullion dealer may not, who knows what they're going to charge for the premiums on the silver that you do trade. Will they do an even trade? My guess is not. They want to be able to make money off of it, and they need to be able to move the gold once you sell it to them. And in this most recent spike in the gold to silver ratio, we've seen a massive dip in silver prices and only somewhat of a dip in gold prices, meaning that there may not be as much demand for gold right now as there is silver. And so everybody's wanting to get silver right now when the prices are this low, and so they're probably not going to be willing to just trade 1 to 105 at this point, they're going to want to be able to make money off of that trade. So you're not going to really see the realization of that 105 to 1 when you do make the trade. Then you have to think about premiums, when it comes to times to, buy and sell down the road. And you're also at the risk, if you do that, of it widening even more, potentially, and you don't know. Now, the likelihood of it staying at 105 to 1 is much less likely, since we've hit a record now. It will probably normalize at some point, but what will that new normal be? And that's kind of the point of what I talked about earlier, is I think that bar has been risen to that new normal, 75 or 70 to 1. So there you have it. That's just my views. To me, it's somewhat of a risk to do. I wouldn't do it, even though it may be tempting for some. There's a lot involved, and making that happen, that you could lose, you could gain, you may do well at it. I think the best thing to do, if you are interested in doing it, is to call around to some local coin shops or to some of the bigger bullion dealers and see if they would entertain such a notion. Some will, but think about what you could lose in doing that trade, and weigh that with the benefits of doing it. How confident are you that the ratio is going to go back down to what you would consider normal levels? Even if you disagree with me about where that level is, and you think it should go to 50 to 1, it's a bigger risk thinking that you're going to come out ahead at 50 to 1 than 70 to 1. So there you have it. That's just my thoughts on it. For me, I don't really do that. If I was in the paper markets, that might be something to consider. But even as such, I believe that those markets have other risks that we won't discuss here. But I believe in the physical myself. And so that's kind of where my head is at on this. But nonetheless, there it is. Post your thoughts below. Do you think it's worth trading gold for silver at the ratio where it is now, record highs, and very near to 105 to 1? Let me know. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.